Hey guys, and welcome back to Road to Forex. Today we are going over ORB, also known as Opening Range Breakouts. Now I think this is perfect for anyone of any experience level, and personally it's revolutionized my own trading, especially within the scalping sector. I think there's lots of different angles that you can take on ORB. And I really think that whether you're creating a strategy or looking to modify your own one just to make it that little bit better, ORB really hits home hard. And not only that, it allows you to create strategies where you only have to be in the market for a matter of hours, if that's something that you're looking for. So I'm going to start off easy today. We're going to do it on 30 minutes. That means that you can intraday trade or possibly day trade on this particular time frame here. So with that being said, let's get into it now. So you can see on my screen that there's quite a lot going on, right? We have these little boxes here, 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 and here. Now what I get them to do is just extend out over 24 hours. That's why they start here to here. You can see where this one finishes, the next one starts. And again, this is something that you could do as a day trader and intraday trader. If you're doing intraday trading, maybe you could only do it for or extend it for half the day, for example. But I want to be day trading through here. So what you can see on this particular day is that we have our opening range or high here and our opening range low here. In fact, you can see ORL and ORH here. If you even hover over it, it tells you what the highest and lowest point is. Fantastic. Now, just in itself, this isn't an indicator that is just going to allow you to trade straight away. It's not. You really do need a little bit of price action behind you. For that, you can always look at my Patreon. You can work with me at roadtoforex.com, right? Always need a mentor or someone to give that little extra bit of help. And that's coming from someone that paid his own mentor to help him in the markets. That was my story, if you've listened to my podcast at all. Again, to get in touch with me or listen to my podcast or join our private Discord group, the link is below. So, what we have here, and let me just delete this, is a bit of a conundrum. Because once we get this opening range breakout, what does it mean? Or this little opening range high, this opening range low. Well, I've set it to half an hour, right? So within the first half an hour of, which is right here, 9 a.m. till 9:30, the high was here and the low was there. Happened to be on one candlestick. You can see that here, this is 9, it's the one candlestick. As that market has opened, it is showing me where the low and the high was that first half an hour of the market opening. Of course, you could do this for London and you can do it for New York as well. But here in Australia, I like to wake up and just start trading and getting into it. So that's what we can see here. First candlestick. Now, what I like from here is a sign that the opening range is being respected. Hey guys, Editing Alex here. Just to let you know that the full version of this is going to be on my Patreon. 30 minutes, an hour long sometimes. I charge $60 for an hour, and you can get this for less than a cup of coffee. You can see this, other cool stuff, Fibonacci retracement tools, different time frames, how to trade them, etc. So hopefully I'll see you over there too. Alright, back to the video. Now let's look at this area up here for our first example. We have our candlestick that shows us the high and the low of this area. Great. We stayed in it for an hour, because again, we're on the 30-minute time frame, and then it broke out. Because I'm looking at opening range breakouts, does that mean that I'm hopping in here straight away? No, I'm not going to. That in itself is literally just a breakout strategy, and I've never put a lot of faith into breakout strategies themselves. Why? Well, we broke out here, but we immediately came in. Yes, this was a massive move to the downside, fantastic, but I would rather have the market say to me, hey Alex, I'm not coming back into here. For example, let's say we hop in. One, on this initial breakout, I have no idea where to put the stop loss because it very well could come up here and test. test the bottom of the range again. Very easily. You can see it happen around here. You can see it happen in this one. If we go down to this, you can see it happen in this one again, right? You can see it happen in this one multiple times. So it could come and it might push its way back in. So having my stop loss here, if I was hopping in the initial breakout, is not going to work for me. It's just not. So I'm going to need as a bare minimum to have it 3/4 of the way from this halfway line of the opening range, because you can see there's a dotted line. That's the halfway mark. Watch this. From the low to the high is basically 25 pips. What's this? 12.6. Right? It's the halfway mark. So I'm going to have it here if I want to try and take a bit more, but what's 5 pips? Not a lot. So even though this did move quite a long way down, and I definitely get a 1 to 2, which is great, I'm looking for really large moves. That's what I'm looking for. If I'm intraday trading, this is going to work. If I'm day trading, yeah, cool, it is, but I'd still rather have a slightly smaller stop loss. 31 is absolutely fine. There's nothing wrong with that. But we are at the higher end of stop losses for this particular time frame. So, just in a stop loss by itself, this is too far. I would have needed a breakout candlestick to be somewhere around here. But why? Why do that? Because there's going to be a question that's in your head every single time when you're looking at this is, number one, will it retest? 2, how far will it retest? Those are 2 questions I should actually say that are going to be in your head. Is it going to retest? In which case I'm immediately going to go into drawdown, so maybe I could get a better entry, right? If it's going to retest, that's going to happen. And if it does, should I wait for that retest to happen? If I don't know potentially how far it's going to go into this range, should I just wait for the retest to happen? Maybe I can get a better answer. Maybe I could get a better entry into this area. Maybe a tighter stop loss. Maybe I now have a great area for my stop loss because it's retested once. Probably not going to go and retest again. And if it does, I can just give it a little bit more space. But the massive benefit here is I can take out those 2 questions. Why? Psychologically speaking, if you've got questions and that's in your head going, oh, it could retest, it could do this, it could do this, it could do this, that's going to be playing over in your brain, especially if you're a beginner, which is going to make you more jumpy, more nervous to hop out of trades, etc., etc., etc. But if you know the retest has happened, it's come up to, let's say, here, and then it's broken to the downside again. So this one came up, this one came down. Well, yes, on this one I've given myself a bigger stop loss. Probably not going to get that high again. It's retested it. Why does it need to come back? And if it's going to come back again and keep on retesting it, we're probably going to lose anyway. Doesn't matter. That's what we can see as a perfect representation here, right? So let's have a look at this one and why this example as a trade that I took and something that was far more superior to what I saw from before. So let's have a look at this one. We initially break out. Cool. But I've got those 2 questions in my head. Is it going to hit the bottom here? If so, and it's retesting, how deep will it go? I'll wait. See how far. It's retesting, 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 retesting. What am I waiting for? A secondary breakout. So breakout, retest, breakout. Those are the 3 things that I'm looking for here. Because if it wants to hit this area and break out and push down again, then I know that the orb, that opening range is being respected. It's actually forcing the market to the downside. Just because it's there does not mean it's forcing the market down or up. We have to wait for the market to confirm that. Otherwise, we're just going, well, it's broken up, so I hope it keeps going. Well, it broke up here, I hope it keeps going. Oh, you lost. Oh, well, it broke up again through here, hope it keeps going. Well, you lost. Well, it retested through here, never broke up again, you would have lost. There's 3 losers right there. Maybe you could say this one, it was an extended breakout, but it's not very good. This one's far greater. Breaks out, has the retest, never breaks out again, great. Comes up here, breaks out, retests, but I'm not looking for the breakout. Look at this one. Absolutely massive. Now, it's more than fine if you're intraday trading to maybe jump down to the 15 minutes. It's such a large candlestick. Whoa, okay, that was huge anyway, it doesn't matter. This probably would have been too big, but this is the example that I really like. It's a breakout, it's a retest, it's a breakout. Yes, your stop loss would have been way too big to get anything out of it, but that's the sort of stuff that we're looking for here. And we can go back. You have your breakout. Yes, it took a while. Did we have the retest? Yes, we did. This one here, really nice retest, big push to the top side. Look how big this candlestick is. 27 pips in all. Fantastic. I know where to enter. Here's my entry. Here's my stop loss. Fantastic. And I'll go for a 1 to 2. Maybe I can stay in and try and go for a 1 to 3, 1 to 4, 1 to 5, depending on what's going on. Cool. This never really worked for us. But you can see here, retested. Strong breakout, still waited for it, right? You could use the same amount of pips again. Where's 27? Boom, it's right there. 3 consecutive green candlesticks in a row. Really bullish momentum. Fantastic. Hop in here. Maybe we would put a stop there. And you're aiming for something like this, right? You don't have to go for 1 to 2s all the time. You can go for 1 to 1s. Yes, you would have lost on this one when it came back down, or maybe you go for 1 to 2s, and when it hits your 1 to 1, like we can see in here, you hop out. That's really it. So if you guys want me to dive deeper into this, go ahead, tell me. I'll put an extended version of this on Patreon as well, so you can get into it. Maybe it'll be an hour long, maybe a bit longer than that. We'll see. But I'll be deep diving and putting this on my Patreon later, so you can have a look at it too. Right? So just letting you know there. Alright guys, I hope you enjoyed this, and I'll speak to you in the next one. Bye.